to be like, I don't know, to be like the GOAT, you got to cross like generations. You got to get like 40, an age gap of 40 years of people laughing at your stuff. You know?
Who do you think is the GOAT of comedy all time?
Dave Chappelle.
Dave Chappelle's objectively your GOAT.
Clearly. I've seen him a bunch of times, and the reason why is because he's not just funny. He's a great storyteller. Like, did you see he won some award? He won an award.
Dave Chappelle is definitely the GOAT.
Yeah, absolutely. I would say he is the absolute GOAT because he's not only really funny, but he can have you leave a show and like really think about things. So it's more than just like a surface level laugh. He really makes you think about things.
He makes you think, yeah. And he gets to be like deep and conscious without sacrificing the funny.
Yeah, and his last special, he literally was like, I'm going to tell you guys what the punchline is. Did you see this one?
Yeah,
I'm going to tell you guys what the punchline is. And then I punched her in the, and then when you still laugh. I'm like, he's like Babe Ruth, dude. He's the GOAT. I'd love to see him and like Louis do a thing. That'd be fun. He's
legit. I think Andrew Schulz is my GOAT comedian because I grew up with him. I have so much respect for his
intellect. You're 25.
Obviously, Dave Chappelle is the objective GOAT, but Andrew Schulz to me is like my GOAT.
25. What's funny is like
he's the first guy I saw live ever stand up.
The first comedian.
Yeah.
Like you probably see Dave Chappelle the way Vitaly and I would see like Eddie Murphy. We grew up on him, raw and delirious, quoting that as kids. Yep.
Yeah, it's so funny too. The first comedy show I ever went to, Andrew Schulz's thumbnail popped up on YouTube. Never knew the guy. Clicked it, saw 30 minutes of him do crowd work. Bought the ticket right then and there. Like I bought the ticket I called him my friend in his senior year. I was like, "Yo, we got to go see this guy." And I saw him at Town Hall in New York, and it was amazing.
I mean, that's how it should work, right? Wasn't that like the promise of social media?
Yeah, literally. That was it.
Dude, stop shuffling us around. We're not cards.
Dude, I know.
I was trying to get you in the right place.
Fucking so annoying.
All right, hello everybody. Welcome to the Finance Junkies. Carlos is back. I know he was gone for 2 days. He had real life stuff to take care of, but he is here today. Thank you, Carlos, for joining us. People missed you in the comments. They're like, "We miss Carlos."
Yeah, Carlos. I missed you guys too. It's weird how it's like gym guilt,
bro. It's like
it's the gym.
Wait, isn't Carlos supposed to be at the bottom and Vitaly?
Yeah, you're right. See, I forgot his spot. Yeah, it's like a group therapy hour where we just get to talk stocks and it's super cool. And 72 people are here in 2 minutes. Thank you so much for being here. Got a lot to talk about today. Okay.
Before we go on, you brought up Raw, Eddie Murphy's Raw.
Yeah.
So I forgot how old I was when it came out, but we were young. 10? I don't know. 15.
I think
young.
No,
I was like 10.
Was first, right? Delirious was second, right?
So I convinced my parents that this was the newest, hottest Eddie Murphy movie at like 10 years old. I was like, this is going to be funny. It's going to be great. We get in there, and then it's just Eddie Murphy on stage.
Yeah. It's horrendous.
And like 2 seconds in, he's like, pussy that, dick this. My mother's like, where did you take us, son? She immediately picked me up and just like walked right out of the
that was like a friend of mine who took their mother and father to go see Wolf of Wall Street, and she was like, the scene on the plane was the most uncomfortable 10 minutes I've ever had in my life. Like, you don't know what that's going to be. Yeah, I guess every kid has that where you're like, Mom, this is what the kids are calling it these days.
The scene where Margot Robbie is spreading her legs open and that's, oh my God. When I saw that, I was like, 15 years old? I was just like, that's hot. I was just
that movie came out 2 years ago. 15 years old.
No, that movie came out 2013, bro. It's been a while.
I know. I'm just
listen. If you saw that scene and weren't turned on, you were gay. Like you just knew. Like at that point, like, hey, I'm lost.
Oh shit, he's gay shaming you. You're gonna let this podcast has devolved.
No. He's just saying, like, bro, if you're straight, like that scene is like it turns you on. It was just objective.
It was a pretty hot scene. Yeah.
I forgot we got Square earnings as well. We got a lot to talk about. Okay, so a lot of you.
Happy Cinco de Mayo. Happy Cinco de Mayo. Because I'm not gonna see you guys tomorrow.
Oh, that's true. Happy Cinco de Mayo. Yes.
So I'm just
happy Cinco de Mayo.
Meanwhile, I'm just like an alcoholic. I'm kidding.
You guys really appreciated the timestamps. I think it helped with retention. If I am not incorrect, let me confirm. That was our highest viewed podcast ever.
Oh yeah.
At 3.9K, it'll be 4K by the end of the night. We haven't cracked 4K yet total. So
it's because I wasn't here. I should go, guys.
No, sorry. I'll see. No, I think the timestamps helped. I really do think because when people can know what to click on, at least they watch something, even if they don't watch the whole thing. So
yeah, I think for sure.
So we'll keep doing that tonight. Again, when we transition, if I forget it, you can just put timestamp in the chat and I'll take a look at it. All right, I think let's start off the day
Mhm.
with
Primordial.
Shopify and Apple earnings. Let's do Shopify first.
I don't know. There's only 125 people. I think we don't talk stocks until over 200.
So what
I
are we
think we
gonna
just go for it. That's what the timestamps are for. They'll miss it.
Yeah.
They'll miss it live.
I know. I'm kidding. Go ahead.
They come, and then we'll just keep going.
If it was 2 people,
Okay,
it would still do it.
Shopify.
No, well, Vitaly sent
Yeah.
Vitaly was like, "Yo, check it out after hours." It was like up,
Crazy.
up and away.
Where is Shopify after?
I think I do own Shopify. I was smart enough to buy it at the highs and the lows, so I got both of them.
How is that smart?
No, I know. They're definitely at the highs. I
It's
bought
called
very
a
little
joke.
though. I went heavier
in America. That's
Yeah,
a joke.
that was a
It's
joke.
he says something that's opposite to what he really means, and
Explain
you're
to this.
supposed to
It
laugh.
wasn't funny. That's what I'm saying. That's the problem.
But I did go a little bit heavier on the lows, by the way. So I'm actually up pretty well now on Shopify. I should have bought way more. We never buy enough of that stuff. But still, I didn't buy it. When I bought it at $27, wherever it fell to, it was still at a 2,500 forward PE. Okay. So I was like, let me just dip my toe in here at a 2,500 forward PE. And now it's at a 5,000 or something forward PE. And, the stock is overvalued. But I think people, one, they beat earnings. Two, they sold off. They fired 20% of their workforce, and 3, they sold off businesses that weren't cash generating businesses. So I think Wall Street just liked all of that. We'll see if it continues tomorrow, but those are the things that pump the stock. Will it last? I have no idea. And I'm definitely not going to chase this one.
I think the layoffs, and then Chris, we can get your thoughts, and then Carlos. I think the layoffs were a bit ruthless on earnings day to see your company do so well because you are getting an email that says you're laid off. Look, I respect Toby Luke a lot as a CEO, and he's got to do what he's got to do. But man, that was cutthroat. That was like, fuck you, employees. You're gone because we need to get this stock price up. And look, he's got to do what he's got to do. But that was rough. Distribution.
Why is
business
that cutthroat? Why is that? What is the difference between anybody else?
Toby Luke brands himself and Shopify as a company that genuinely cares about their employees. And you don't genuinely care about your employees and get rid of 20% of them on the day of earnings just to pump the stock. You care about the shareholders, which is what you're supposed to do.
I mean, I don't know.
Remember, Shopify's in Canada. They're a little bit more.
I know, but hold on. What does it matter what day you get fired, whether it's on earnings or the next day? Like, I don't understand.
Because if they did it randomly, it would not be coincided with the decent earnings they put up, which would not have resulted in being up $23 today.
That's someone in the chat. Someone in the chat was asking, what was the book? It's not a book. This was the issue of GQ, October 2014, the year I moved to Los Angeles. It wasn't the name of the book. It was the name of the issue. That a fool at 40 is a fool forever. Anyway.
It was pretty ruthless to me, but nonetheless, he had to do what he had to do for shareholders. Distribution business sold it off to Flexport. This proved my thesis a little bit more that they're really not going to compete with Amazon if they can't make distributions profitable, because Amazon can't make it profitable, but obviously Amazon is scale, and so they subsidize it. Overall, good earnings. I'm not buying it at this valuation, but I'm happy for shareholders that are in it.
What was nice when we were talking about, even on the cowbell, when we had a couple of episodes, that Amazon's only competitor was going to be Shopify, basically, with the logistics network. And now it's Flexport. Is that the competitor to Amazon? So once again, this actually gives a bull case for Amazon to continue 100%. Doing what it's doing. So if anyone who's thinking, I might buy Shopify or wait, well, no, Amazon's down, So it's probably better just to buy Amazon.
Chris, your thoughts on Shopify?
I've tried to understand the business a lot more, but I can't get around how they're going to be
a little high, just to gain a little bit lower.
I don't know how they're going to be able to honestly compete with the likes of someone like Amazon. So I'm not in it. I will just comment about the ruthlessness of CEOs. Pressing times like this, you need a CEO at the helm who's going to be ruthless, right? Because businesses are slowing down. The availability of credit is starting to diminish. So you have to make sure that you're profitable. No longer are the days where people are just going to infinitely give you money and let you do whatever you want. So if you're not operating like a business operator, unfortunately, you're not going to do very well. And so, so while you think that, hey, 20% of the people that got laid off, you feel bad for them. Yeah, but think about the other 80% that are going to keep their jobs and be able to actually benefit from a lot of the stuff. So you look at Meta, it's the same situation, right? Well, Meta was like hiring people right and left, and then they ended up having to lay people off. But I mean, that's how business works, where when you have the opportunity to hire, you hire, and when you don't have the opportunity, you lay off as you need. The only thing is, um, a lot of hiring, from what I know, a lot of businesses, when they do hiring, they know that the talent pool that they're going to reach out to is going to be very broad. But then as these people work at your facility, there's going to be underperformers. There's going to be people that get lazy. There's going to be people that, want to just chill. And you want to get those people out. There's businesses out there that in the past, like GE used to have, like, Jack Welch is on it, and Vitaly. Do you guys know who that is? Well, I mean, I'm sure Vitaly, Jack Welch. Okay, Jack Welch was the CEO of GE for the long time. They used to call him Neutron Jack. And one of the policies that they had is that every year they would fire 10% of the bottom 10% of the company. Why? Because there was always this constant thing of like, we need to perform. We need to perform. I see a lot of times when I talk to people in tech, because of the last 2 years of just kind of easy compensation and everything else, a lot of people have become slackers. They're just like, whatever, my RSU. There's even like buzzwords that a lot of them use, like rest and vest. Like, what, you know what that means? Rest and vest. Have you heard of that? That means that you just basically, you don't really give a shit about your job anymore. You're just waiting till your options vest so that you can walk away with a huge payout.
Although quiet quitter was
quiet quitting.
Yeah.
Yep. So the efficiency ends up causing the businesses to not be as nimble as they need to really perform. So these layoffs are a good way to take those people out very broadly without targeting individuals. Usually companies have like a list of people ready to go. Like, I put a list of people together who are underperformers, and and then once these layoffs come, it's like, bye.
All these companies have key metrics, and I'm sure they know for a long time, but for some reason, during the heyday when money was cheap, they didn't know how to fire them. It was hard to fire a tech worker.
They were hiring more.
Yeah, but I guess you didn't know if you were going to use them ever, even if they sucked. So now it's a lot easier to say, you know what, we got to get rid of 20%. Let's just get rid of the bottom 20%. But before you leave Shopify, Kelly had a correct thing that she said. They're not competing with Amazon. So that is true because, in fact, they're competing with Etsy, which is the reason I said is because my wife had an Etsy shop when she started out small, right?
Does she still use Etsy or no?
No, because their fees were too much. And when you're a bigger shop owner like she was, basically they contact you personally and they help you out with your business. So like Etsy, I think would help her. And now Shopify, I think she has calls with them, and Google helps her. She actually has private calls. Like, imagine me and Carlos try to get some help with some of our ads on our 3 people who watch our channel. Nobody wanted to help us. But
Google ads, it was hard for me to set it up. I set it up a little bit. I spent like 40
if you're a big advertiser, you're allowed to, you get a call.
I had to
help
talk
you with
with
your
a
ads.
lady legit to do it, and it was ridiculous.
Yeah. But so listen, so basically she moved to Shopify and she tried Amazon too. So this is a real business owner who tried Amazon. Amazon sucks because the way they deal with the customers, like if a product gets damaged, you're responsible. So if someone damages something happens at their factory, it doesn't matter. You're responsible. So they take no responsibility. So all the small shop owners, I know Amazon is a big behemoth, but they don't want to be, these small shop owners don't want to be part of Amazon. They just have no choice. So for some reason, my producer wife decided not to continue. She just runs her own Shopify store. So it doesn't compete with Amazon in the same way because she has a special product, obviously. So I think Kelly's right in that point that if you have a certain niche product that you're not going to compete in the Amazon ecosystem because it's something different. But having said that, Shopify is still the only real competitor as it grows into the future that we thought would compete with logistics and everything for Amazon. And now we see it's probably not going to do that at all, or it's going to do it way out into the future, right?
Yeah, that's fair. That's very fair. Let's move on to the big topic of the day, which
Blake
is,
says I got to get me a producer wife.
I love how you call her producer wife because of Farzad. That's hilarious.
So I just want to address one thing in the comment section. The wages out there are not worth working for. They haven't kept up with inflation for years. Now, some of that is probably true. There are definitely jobs where wages have not kept up. But when you talk about like mega tech and big tech, you're talking about people with like total compensation in the like $500,000, $600,000 range. Okay. Some of these people working 2 jobs. I know a guy who was working 3 jobs. Don't ask me how he was working 3 jobs. I mean, he's talented engineer, smart guy, but he's like, look, man, if they want to pay me, I can do my job in 25% of the time. Right. So why don't I just now he got laid off from one of his jobs. He's still doing 2 of them. But this is just how the tech industry is right now, where you're not getting the maximum potential out of people because you don't know what's truly out there. So I would say there are definitely people out there that have their jobs have not kept up with their compensation. Like myself, like I have not gotten raised in the last 2 years, which is kind of sad because I'm actually very productive at work when I do
Podcasting doesn't pay
my
more. Sitting at home.
no, I'm just saying that
You're saying that
I
you're
have,
undervalued and we should buy Patel call
well,
options
no,
now.
one of the reasons why I haven't got a raise is not because like my job doesn't want to pay me. It's because I'm part of a union. And one of the things that happens when you deal with unions is that you cannot privately negotiate to benefit one person. Like you have to benefit the entire union shop. So it's
Well,
almost
what union
like
is this? What union
huh?
is this? What union? I don't want to
I don't want to say out loud.
Local 52, baby, right here.
The good thing about a union is that you won't get into this position where you have these mass layoffs without a valid justification. The union does everything in their power to fight it back. The problem is when you have weak performers and you have really strong performers, there's really no way that you can like additionally compensate the strong performers. That's one of the major problems with like unions that you end up having. So like right now, if I put in twice as much effort as the next guy could have 10 years on me where he's been there for 10 years. He collects more salary than I do. Like I have people right now that I teach that have been at the job longer than I have. And I teach and they assign me stuff and I actually do it. And they get paid maybe like 45K more than I do, but they've been there for like 20 years. So it's a weird situation when you're dealing with like unions and stuff. But at least I know I have job security. So
I think
that's
Ricky
nice.
G says it best about you. Quote,
What's
very
that?
productive at work, but he's on Twitter 24/7.
No, literally,
Hey,
that's
listen.
you, though, Chris, all day.
Huh?
You know, because you work
well,
all night. Right? So
Chris, by the way,
I get all these
companies have access to social media now. So if I was
Yeah.
Not
checking up
Chris's.
on you,
They don't know Chris is
So-
an influencer.
if I was
So-
checking
so-
up on Chris, by the way, I'd be like, he's always on Twitter.
Chris,
He's
does
on-
anyone
he's
at
on-
your job know you're a thin
Hold
tweet
on. He's
guru?
at 16 hours of YouTube a day.
No, I'm not on. No, that's that's where you guys are mistaken. When I'm at the job, I'm at the job, and because I work a lot of crazy hours. So one of the things that I do is when I'm at work, social media is done. I don't do anything like that, you know.
I
So
don't know. I can't keep up with you, Chris.
yeah,
The flip side of this, and I don't know if we are going to talk about Paramount and whatnot. The flip side
We
of
will after Apple. We will.
the flip side of this, the opposite of the union thing is the freelancer. I think when we went all work from home, the people that are really good at time management, this idea of taking multiple jobs, it's created a brutal environment for a lot of people. Like me, I'm pretty good at managing my time, and I've always got a lot of plates spinning, but I'm technically taking work from like 4 or 5 people. Like they'd be paying 4 or 5 individual people to do this work. That's 4 or 5 households, that are now squishing their way into or competing for different jobs that I've got, and a lot of
So
people.
how do you these 4 or 5 jobs that are supposed to be democratized? How do you get them? You just be like, oh, I can do it, and they're just trust you?
Yeah, because in my business, like Chris is paid like hourly, and I am paid hourly as well. But since mine is like a creative business, a lot of it is subjective. So it's not done when you've put 5 hours into it. It's done when the executive producer says it's done. So they watch your cut or they watch a scene and they go, that's great. So there's some times where I could spend a whole week, say, cutting an act of a show, and it's just not good. Like we didn't have good footage. It's just not good. Other times I could spend the day doing it and there's no notes. You get paid the same. And so it incentivizes me to work as quickly as possible. But there's also a problem with it, because what'll happen sometimes is you're incentivized in my business to work as slowly as possible. I'm actually punished for being fast. So if I complete my job in a day or two, then they go, oh, great, you have the rest of the week off. And I'm like, that's not what I wanted.
It's like you're a government worker.
Yeah. Yeah, it's like the DMV. One of the reasons it's so inefficient is because they get paid the same no matter what.
But these clients have fat budgets, correct?
Less fat now. The clients have been taking Weight Watchers.
Because I'm like, there's no ethical.
See, you have to ring the cowbell every time a key word is said.
No, it's budgets are getting constrained, and when they can't shrink the budgets anymore, then they just shrink the time frame, or they ask for more hours per day. But I've been talking about this with a lot of friends in my business, and I think we are reaching like a critical mass. Like I don't know, without getting too scientific, you know that point when like a sun turns into a neutron star and it cannot collapse anymore? This is where we're at. Like, gravity and
could you calculate on the
Yeah.
top of your head? Can we do a fun little project right now? Or okay, maybe Vitaly and Carlos and me can do it because I don't know if Chris has ever been in this situation. What is the highest hourly rate you've ever gotten paid? If you had to
I can't tell
calculate?
you. I can't tell you.
What?
that.
No, no, why
wait,
not?
you're saying if I were to like divide the hours worked for the pay that I got?
For the project, yeah. What would the hour come out? Like, let's say you got like a $10,000 project, but you worked like 8 hours or something. Like, is there any situation that you have like that?
And I'm not willing to talk about it.
That means Vitaly's got him paid a shit ton for an hour, and he doesn't want us to give.
Just know when you work on a commercial in the film
Yeah,
business,
you get it's.
you're paid insane amounts of money. Okay.
But it's because
I'm not
here's
saying it
why,
always
because-
happens, but it's insane amounts.
We
of
would say
money.
at least thousands an hour. You would say at least thousands an hour.
Yes. Yes.
Yes. Okay.
But it's
fair.
because the budget for those has to be spent in 3 days. You understand? Like that.
But you got to
have a
work your ass
feature-
off in those 3 days, though.
But
Yeah, of course.
you can only. Here's the thing: work your ass off. If like 15 hours is 15 hours. Like
Right.
you put in the 15 hours, and that's it. What happens in those 15 hours?
They're really paying you because they can't afford messing up. That's what they're paying you
Right.
for.
Right.
So
that's true.
when they do something in 3 days and it's a big brand, they don't have they don't have more time to figure it out later. Like, oh, let's come back in 2 weeks. No, in 3 days it's done. You did just an amazing, stellar job. And if you didn't, they will never talk to you again. Okay, there is no second call there.
No, he's right. And I used to work production. I started my thing in production. When soon as something goes down, the first question is whose fault is it? Before anyone tries to even
you
move
just
to
want
fix
results.
it, whose fault is it?
When
I'm
I
not going to talk a lot of gossip, but I'm on a show right now where the director done.
you think the director is getting cut? Wow.
Oh, he was fired.
He was. Wow. When I was 19 and I started my debate public speaking consulting business, and I got $25 an hour at 19, when my friends were making like $8 at Starbucks, I was like, holy shit, I'm getting $25 an hour just to talk to someone on my laptop. That went up 3x in another year, and I'm like, this guy can't. That's when I realized, oh, people have money, and if you get the job done, they'll just give you the fucking money because you get the job done, because they value their time more than anything. They don't care.
What I tell my clients is when they see sometimes the invoices that I sent or my budgets, I'd say it's the sleep at night guarantee. I'm like, you pay this price and you can go to sleep, 1-800 mattress, man. You're going to bed. Leave off the last S, bro, because it's going to get done. You can go to bed and know that you're going to wake up in the morning and it's going to be done.
Okay, let's get into I love it. That's great. It's
and just to answer your question, yeah, in terms of how much diluted or
if you're comfortable giving a number
rate, it's I don't know. We should talk offline, Vitaly, and see, because I think we've probably hit around the same number.
It's in the couple thousands, I'm imagining, per hour.
5 digits
per hour. Wow.
No, yeah, 5 digits
per hour. That's amazing.
But this is like, okay, I won't say the amount, but I'll tell you how.
Yeah, but think about a Wall Street guy. How much does he get an hour? $1 million?
I don't know.
I mean, like,
no. Investment banker doesn't make that much an hour.
Some
compared
make
to
tens
Are
of
you
thousands
kidding me?
an hour.
No.
Yeah.
If you look at
hour, no.
millions
if
an
you
hour?
divide it by the hour, yeah. Look, I mean,
No,
if you have
these
their
motherfuckers
bonus,
work 100 hours a week and they're on coke. Like, I know these guys.
Yeah, but they're getting paid 20
they're
to
getting paid
50 million a
$2
year.
No, you want to know who gets paid a shit ton an hour regularly? Lawyers. Like especially if you're a high powered, what you're doing lawyer, especially bankruptcy law, like right now, dude, you're talking about billing thousands of dollars an hour. And I'm not talking about like, hey, this is just one project. This is hourly billing. This is like them just having a conversation with you is costing about $2,000, $3,000 an hour. Lawyers are the ones that make money, but there's a big difference though in the quality. So the one thing that you have to realize is when these guys are talking, and I know I'm going to talk to chat a little bit, these are professionals who know what they're doing and they've got a skill that other people don't have.
Yep.
When you have a differentiated skill that goes above and beyond what's out there on average, yes, people will be willing to pay you for it. If you're thinking that every single lawyer out there is making like $1,000 an hour, no, that's not how it works. It's the same thing with surgeons. It's the same
Alan
thing with
Dershowitz
anyone.
has earned his 6 figures an hour.
So it's all about the skill level that you have. So it's nice to just think that, oh my God, I'm going to be a lawyer. I know lawyers right now that are being paid technically minimum wage because of all the effort that they have to put in and the amount of money that comes in. Like if you look at like public defenders, like I have a friend who's a public defender. she works on so many cases, and she barely makes the money that she would if she was on the other side of things.
I never understood, why are they public defenders?
because they actually care about helping.
Yeah.
people.
Yeah, but you can do that also in some spare time, but while
No,
having a real
no.
job.
No.
The lesson
These are
learned
like,
is
these are
don't
like
care about
immigrants who are
people.
about to get deported, and like you're their last resort, right? So they
Yeah.
You know,
Yeah.
not everyone is motivated just based on pure money. Like
I don't believe you.
I have hey, listen, you may not believe it, but I've turned down I've turned down a job that could have paid me a lot more, but I like where I work. I like my colleagues, you know, it gives me some flexibility. It gives me like a purpose. Like I know that it sounds weird to say like, hey, you shouldn't just be motivated by money, but there are things beyond money that I know a lot of people, even when I was in the military, like some of these guys, they had gone to fucking West Point or they've gone to Harvard, and yet they were in the military. I can tell you about one surgeon from Stony Brook University, Dr. Pryor. Dr. Pryor
What's
he
his
was
first
a
name,
surgeon.
Richard?
Huh? I
Ring the
I
bell.
actually
Ring
don't
the bell.
remember his
Ring the
first-
bell.
I don't
No,
remember.
it's not
No,
deserved.
no. Let me- I don't no.
But that was good. That was good. Come on, man.
Now
He's
funny
like
thing is
Dr. Richard Pryor.
Dr. Pryor could have stayed in you know, as a surgeon and done his time and everything else and made millions of dollars. No, he signed up he was in the military and he got killed on Christmas Day
Oh damn.
while deployed. So these are the things that like people don't understand. Like, you know what, people go beyond just this dollar amount. Like there's a level of like what's the word? There's a level of happiness that you get by
Yeah.
helping people and
Teachers.
doing more.
Teachers are very
You know.
happy people, and they're very
You know.
underpaid. But
So
Can I just
I
say,
just-
I'm
yeah.
sure I speak for a bunch of people in the chat. Chris, you need to have kids. Okay, you need to
Yeah.
make some babies and just talk to them all day.
we're working on it. We're working on it.
Just say,
they are indeed working on
have
it.
some babies.
All right, let's move on to Apple. Apple earnings. So this is a big one. Okay, what's the timestamp here? Where we at? 26:53. All right, EPS 152 per share versus 143 expected. Beat. Revenue 94 billion versus 92. Beat. Gross margin beat. Yeah, 44.3 versus 44.1. 24.16 billion in profits. iPhone revenue 51 billion, Mac 7 billion, a little bit lower than expected. iPad revenue a little bit lower. Other products 8.76. They beat. Services, advertising, all the other stuff they do, slight miss, but basically 20.9 billion compared to 20.97. They issued a $90 billion share buyback. I think Apple has bought back over $600 billion worth of shares in the past 11 years. And shareholders were happy. The stock wasn't massively up. The stock wasn't massively down. It was pretty much flat. They also raised their dividend 4% to 24 cents a share. What do you think about Apple earnings and what effect it had on the market? Do you think the market liked it, or do you think WWDC is in June, or do you think that this was basic enough but not enough to keep the market from collapsing? Carlos, we'll start with you.
I had a feeling you were going to come. I'm just really impressed at how Apple just consistently performs. I was a little bit concerned because their overall revenue dropped. Wasn't it something like no, their overall sales have been dropping. So they're expanding their margins. They're reaching a kind of like a peak saturation point. But I am just really impressed with how this company is run, how they consistently perform, and how they avoid a lot of the pitfalls that other companies do. You guys know the story. I was heavily invested in Apple. They did very well for me. And I sort of sold out of them when I felt like I squeezed all of the lemon out of that juice. But the more the time goes by, I'm like, it's never a bad time to buy Apple. And I can understand why they are like a bit of a canary in the coal mine for the S&P in general and markets in general, right? If Apple's doing well, a lot of things are doing well. So I'm just super, super impressed with this company. And I'm very, very curious for this next WWDC. I feel like it's a crossroads for the company. I feel like this next one, if they don't come out with some new product, particularly these glasses, then we might be seeing the end of like what I would consider like the Steve Jobs era, right? Like Steve Jobs sort of threw this pass years ago. He set the company on this path, and this would be their next level up. I'm also super impressed at the amount of the buybacks that they're doing. I think that people need to be educated on the fact that like these buybacks are like, it's like buying income. Somebody posted on Twitter
what they're
today.
doing is they're inflating their stock price. And Chamath Palihapitiya basically said it's financial engineering, which I'm okay with, by the way.
Yeah.
They're buying $90 billion worth of stock. I mean, like, I don't know what the float is of that.
If you're an
but it's a lot.
investor, the thing is like if you're an investor and you put in a couple grand, like it's like, because I know we're going to talk about Apple as a bank, right? But if you're investing in Apple and then they're taking their profits and buying it back, they're basically telling you sell some, take some profit off the top. They're sharing their profits with you in a way that's beyond dividends, and they have the cash to do it because obviously they're not. They built their Starship place. They've got plenty of new products. I'm just super impressed with this company. This whole banking thing has me a bit concerned for like antitrust. Like they might get too big, but that's a separate conversation. And overall, I was impressed with the earnings, and especially in this environment.
Vitaly, thoughts on earnings? Then we'll go to Chris.
I am always impressed how Apple does, but I think it's also good because when Apple does bad, I think everybody understands that the whole world does bad. So when there's enough money to buy these devices that are expensive, that's like a consumer good, right? So if they're doing okay, I think it is a sign. Even Microsoft, those are signs that maybe the economy is not as bad as everybody is claiming it is. So I know everyone's thinking that we're in such a dire straits, but I read these guys called All Star Charts. I don't know if I think I sent you a link to them, but basically they're like, we've been in a bull market for the last year. S&P is pretty high. These stocks are making relatively, maybe not new highs, but they're relatively all up. We've had double-digit gains for, I think, almost going on to 2 quarters in the S&P. So where is this recession, and why are we still up so much? I think Apple is one of.
Sell in May.
We'll see what happens. I mean, maybe this heading into summer, it's worse, but the fact is, the good companies have not been damaged as much, right? The good companies.
Yeah.
And the S&P itself has not been damaged at all. So we're still waiting for that shoe to drop, but I don't know.
But with so much of the S&P's value on these few companies, if one of them goes,
but if they're still doing good, if they're still sort of even beating by a little bit, and their services are growing and they're selling the product still, I think it shows you that the people themselves, the consumers, are strong and they're still buying these devices. They're still spending on everything. So I don't know. I don't see the negative part of it yet.
Don't you think part of it is the effect of the moat? Like right now, right? If you wanted to get out of Apple's moat because you're like, I need to save some money, you're not getting rid of your email, right? You can't get rid of your iCloud. You're probably not going to lose
I think you're right about that.
You know what I mean? Like
but I didn't have to spend
a necessary spend.
No, I think you're right about that. Like I wouldn't get rid of my iPhotos, and I'd keep paying them $10 for the storage for my device for the photos.
Right. Yeah.
But you wouldn't buy a $1,400 to $2,000 device, but they're selling them anyway.
Yeah. I think some of that too is the attractive incentives that you're not buying it outright cash. They have so many different ways you can get an iPhone now with the next, like the ATT Next plan, where it's
right, and you can have 24 months for it.
24 months, yeah, interest payment, whatever it is. They have different ways that they can get you in the moat. But that they did, I think overall sales units were down, so they're making more money per phone, but they're selling less.
Well, yeah, but that's because they sold a lot of phones. That's just like I think the nature of things. They'll have less phone sales, but if they're replacing it with other like services and stuff, then I'd say that's better revenue.
Well, yeah, like if they can't get you to buy a phone, but they get you to buy 2 watches, who cares?
Right, and also pay for the photos, right, the storage, IT, the TV, whatever,
Let's get Chris's thoughts on earnings. Chris, what do you think about Apple?
I mean, to be honest, I was wrong. I thought their hits on revenue would be a lot more than they were, but technically their headset sales were not that great. It's their services revenue, which I tend to always forget about Apple as how big of a service like revenue generator they are. So I think they're shifting from a purely hardware focused business to now also having a significant amount of revenue come in from high margin businesses on the other side. So they're literally the toll booth to the internet. I know a lot of people don't want to necessarily think about that, but dude, every time we were talking about it the other day, even microtransactions on Twitter, on any apps, on anything, and Apple is going to get a cut for it. And why is it going to get a cut? I don't know. It's just literally they're all they're doing is hosting a platform. That's it.
Do you think an argument could be made like they're almost like a perfect company? They are growing. They are a growth story, but they do pay that dividend. They are safe in the sense that they're diversified in terms of like services, products, hardware. Like it's just a really amazing business model. They're
very, very well run. If you think about it, Tim Cook, the one big tech company that didn't do any layoffs is Apple. Why? Because they didn't go stupid crazy and hire a whole bunch of people during the good times, right? It just goes to show you that, you know what, Apple is an operator. They're also taking a lot of great steps in diversifying their supply chain. They've been heavily invested in China. They know that we're in a confrontational zone with China right now. So what are they doing? They're shifting over production ahead of, like, they could just chill right now. They don't have to shift production. They could say, you know what, geopolitically, it's okay. We'll make it work with China. They're like, no, we're not going to chance it. Let's start
They
moving
did some
production.
of that. No, at the beginning
Huh?
of the pandemic, they did. I think they moved some to what was it, Vietnam and Thailand.
No, that's what I'm saying. That
Yeah.
they are very proactive in the way that they're going to keep their business growing. They're not going to let short-term profits, and even though, like, that's the one thing about Apple, they're not going to let short-term profits dictate their long-term vision in succeeding. And
Well,
I think
having said that, let's actually transition to the banking stuff, because Chris, you can keep talking a little bit more on that. Tanner in the chat, thank you for being here, Tanner. He says, Amit, have you changed your mind on Apple's scary banking offering? So let's talk about this now that there's earnings. It'll be the bank regional collapse discussion as well. Regional banks are collapsing today. Another one, FHN, First Horizon. I think I forgot the name of them, but just a bunch of banks were down. Chris had a really good chart on his Twitter showing that bank deposits for a lot of these regionals are just like absolutely in the gutter. Apple got $1 billion of bank deposits
in like a month.
In 4 days.
Oh, 4 days.
What did you say? Yeah, in 4 days.
Only 1/10 of SoFi.
Well, 1/10 of SoFi, and what we're going to talk about SoFi in a second as well. This is the thing Chris shared on Twitter today. And
throw it out to Tanner,
Yeah, and we'll talk about that. And so as you can see about these, right, negative 40% on FRC, PAC, WW, and then all of these banks, and then just a couple at the bottom that have positive deposits. So the question becomes, do we think Apple, in order to get to their next S-curve, can become a real bank, a real fintech that gives mortgages and loans and all that stuff? Because not just because it was a good idea, but in this moment, because all of these banks are collapsing, and maybe Apple takes a little piece from JP Morgan and Bank of America and Wells Fargo and decides to definitively put themselves in the game because, they have Goldman Sachs backing them in partnership as well. Any thoughts on the regional bank collapse and what it does for Apple? Let's start with Chris.
So let me start off by just saying, no, that's not going to happen. Mainly because Apple's already got a lot of antitrust issues that are starting to creep up on them. The last thing they want to do is go out there and say, you know what, we're going to screw over the entire banking industry and try to gain market share and take away from another industry. So this partnership is pretty much Goldman Sachs running the show in the background, with Apple just doing what Apple does, collecting fees, so that this way they can monetize users.
They're a toll booth.
Yeah,
exactly.
That's
right.
it. Every time that they can set up a toll booth and start collecting revenue that they don't have to do shit with, they're fine with it. So that's what Apple is doing. They have no ambition to become the next JP Morgan. Like, it's just not them. Not to mention, you wouldn't want to be in a business that's has its cyclical ups and downs, and then you have your credit risk, you have duration risk, and all the other nonsense to deal with. Now, I do want to say one thing, and maybe we'll talk about it after a little bit more, but I'm seeing a lot of opportunities in the regional banks. I know that there is definitely a bearish sentiment in the market right now, which is good, because some of them definitely deserve to get their businesses a little bit more scrutinized. But I'm looking at certain other ones, and I'm impressed. I'm like, bro, this is an opportunity here to pick up some stuff on the cheap. I mean, think about 2008. What we're getting right now is the perfect blend of 2008 and today. 2008, there were legitimate problems because you had credit issues where people could not pay. That is not the case today. There are actually assets out there. They're performing assets. They're just not performing that well in terms of what the current market rate environment is. So once that whole narrative flips, so does their entire business, their business model on the other side. So I'm right now just doing a lot of DD in one specific regional bank. And that one I spoke about yesterday was Truist. I think they're a very good company, very great. They're very diversified. They're not just they're not just a small time player. I think a lot of people don't know them. If you're in the South, like let's say Georgia, Alabama, Texas, all that area, North Carolina, you'll know the company SunTrust, and you'll know BB&T. Those are like the main banks down here, right? They are significant in the retail industry, like in small businesses, and they're not going to see nearly the amount of capital flight that these other companies are. So I think they're going to be very well off. And yeah, I'm pretty much like decided tomorrow morning to start taking a position in Truist.
Let me ask you a question. That's
going to buy the whole damn bank.
Well, let me follow. Because honestly, I'm not really interested in banks. Besides the dividends, like I do own JPM and I own SoFi, but not for the dividends, obviously. So Truist, Did you actually go through their books? Do they have
Yeah.
any of this risk that these other smaller banks that are collapsing right now, you
No,
know,
they're way more diversified in their depositor base, and their depositor base is mostly small businesses. Even their commercial segments, they're not like your typical office buildings and stuff like that. They have a lot of like commercial real estate that's specifically for like small businesses. So
okay.
they're fine. They're fine. They're not. They do have a little bit of exposure to real estate as well, but once again, real estate is just one of those things that you just have to hold on to it and things will come in. They've also were smart in that they firewalled themselves with making sure that they have a ton of liquid capital on the side just in case they were hit by some deposits. So they issued, I think, some bonds last year for it. So they're fine in terms of liquidity. Very profitable business. They know what they're doing, very well run. And so I think they've gotten caught up with this regional banking nonsense and they've been unfairly sold off. And I think I'm going to buy them. And yeah, I think I'm going to 5X on them via some options plays that I have in mind. So
Before we leave Apple, I just want to point out the reason they get into anything is to create the bigger moat for the iPhone. So when they're doing this banking thing, I think the whole point is that if they have another tether into your family and you have some money in their account, now all of a sudden it is much harder. Remember we talked about the photos, Carlos? But imagine now you have a bank account. Imagine eventually it is a mortgage. Imagine it is some whatever they're doing with financial products. I think that's what they're doing. They just care that those products get you back into the iPhone mode. So I can see them doing Apple mortgages, unfortunately. At some point in the future, I could see that happening.
And to Chris's point about the antitrust thing, I don't think they ever try to be number one. They don't want to stick their neck out and be number one and put a target on their back. They're fine being number 2 or 3 and let other people battle it out. They just keep collecting the check on the side.
If the mortgage will give them another 0.5% leg up on selling more phones, they will do it 100%.
Mm-hmm.
You know?
Yeah.
We're about to move on to SoFi and what this means for them. But ladies and gentlemen, at 41 minutes and 59 seconds for the 4th fucking day in a row, we got 300.
Boom. All right. And
Vitaly,
we just lost 150 people.
When we see this guy, you hold his ass down. I'm going to grab that fucking bell. I'm going to toss
I'm going to stomp on that fucking bell.
The last sound of it we'll hear is that bell ringing.
At least get a real fucking bell, dude. Get like
it is a real bell. $7 on the fucking stock you're telling us to buy.
Bro, you know what? Listen, bro,
that is a cowbell.
Hold on. Yeah. We all make fun of him for that thing, but I'll tell you right now, if we ever have a merch store, do you have any idea how many of those little mini fucking bells?
Oh yeah, that's yo.
Little
I love the bell now. I love the bell idea.
Fucking greedy piece of shit. All he cares about
guys,
is money.
the bells are only $9.99 on our merch
Nick's
store.
working on that Apple play. He's like, I don't care. I just need 1/10 of our audience to buy one.
You know what? While you guys were talking, I was looking at it was teetering from like 285 to 298. It got to 299, went back to 294. I'm like, we get to 3, and then
gonna make it.
We're at 323.
And going into mortgages is not losing focus for Apple.
Hold on. We're about to
go into banking. Why would they go into banking?
4 days in a row at 300. That's a big deal, and that's why I said we have to do the bell because it's not normalized yet. We have to do like a month of 300 every night before we're like, okay, we'll do it at 400.
How about this? At 400, we stop doing the fucking bell. Like
no.
we normalize.
Agreed. Unless people are willing to buy the bell.
If it's ever at 1,000.
Chris, this might be genius.
I will go to the New York Stock Exchange.
Chris, this might be genius. Imagine like selling the bell. Just think about that. That's
a good idea. We can sell one day.
You know, we're not going to sell courses, right? We agreed. We're not doing a meet Kevin thing, so we're going to sell bells.
I was actually going to respond
like
today.
$7 if people want to support it.
I was going to respond.
I like that. At 1K, we can get a gong, like the fucking Chinese one.
Right, like Danny Carey from Tool.
It's important because this community that we're building. 300 every night. You got to come back every night. If you don't come back, we might not make 300. So we need your support. We are nothing without you guys. Remember, it is not fun talking to 2 people. I've been there. I've been a poor man and a rich man, and I pick rich every fucking time.
Yeah, exactly.
Not saying this is rich. I'm just saying it's
Johnny. Cool. Don't worry. One day we're gonna do a pod where I'm gonna be like literally walk over to amid space. I'm gonna just smash that bell.
I'm gonna be murdered through it. Okay. Is SoFi going to get caught up in the regional banking collapse? Chris?
No. They're fine for now. Their problem is that my biggest concern with SoFi, of course, is their delinquencies from their personal loans. Like if the economy goes south, if delinquencies start to go up, that means that banking is all about confidence. If people lose confidence and they withdraw money, then SoFi is going to have to liquidate the personal loans that they're holding on for sale. Their accounting is what I hate the most. With they have all these personal loans that are just growing, that are all about held for sale. Now, those are non-liquid things. So basically right now, if SoFi gets hit with a bank run above what its cash value is, they're going to have to try to liquidate those personal loans. Personal loans are like literally, if you try to go sell a personal loan, even if they're a really good depositor thing, right now you'll get 50 cents on the dollar. So what does that mean? That means you'll have to market all these other personal loans and you'll get fucking killed. So right now, they are not in the greatest of places. Look, Anthony Noto can keep buying shares to build confidence in the bank. Congratulations. I hope you guys do well with SoFi. But these personal loans are a risky thing, especially if this recession takes a real bite and people start defaulting on their personal loans, and then people lose confidence in SoFi, the company, especially if they see the stock price go down to, let's say, $1 a penny stock. People are going to withdraw their money from their SoFi accounts, which means that there's going to be a bank run. So I think this move right here by Anthony Noto isn't like, oh my God, this is great, I need to, get in while the stock is cheap. I think this is Anthony Noto keeping the stock price high in a time of turmoil,
Chris, I actually
so that
agree
people
with you
don't
here.
get burned.
My initial,
You can't blame him. That's not you say it like it's a bad thing.
No, it's not. He has to do this. This is not one of those things where it's like Anthony Noto has a choice. He is trying to build confidence in this bank, and the best way that you can build confidence is by buying shares. So he's doing it.
I already said
agree
it's
with you. When I
sunk
saw
cost
this,
fallacy. Anthony Noto is
real quick. When I saw this, I was happy, but I was like, it kind of was like out of pity. I felt that he bought these shares. He was just like, I don't want my retail investors to think, I
don't think so. How many shares is this? How many shares is this?
50,000.
$500,000 worth?
That's what? That's
300,000, about 300,000, like that.
I mean, I don't know. I don't know if Anthony Noto would just spend 300 grand for no. He is showing an image that he's going to support his bank, but I don't think he spends 300,000 willy nilly. I don't think so.
Yeah, Chris,
I'm sending you a SoFi ad that I saw on Twitter.
I saw it during the NBA playoffs today.
Look, at this point,
I'm just like, it's brilliant, but it's also kind of scary. If you look at the private chat, it's brilliant, but it's also kind of scary how they're promoting to get new customers on.
It's scary how they're promoting, how SoFi is promoting.
Yeah, like just look at this ad. This is one I responded to the SoFi ad. Yeah, so play this thing.
More money on my money. One more thing I love about SoFi, my money's FDIC insured. With SoFi, I can access up to $2 million in FDIC insurance through a seamless network of participating banks. Sign up for SoFi to get started.
What's wrong with that?
I don't know. I feel like it's a little clickbait.
Well, they're going to a bunch of banks. Like I forgot what it was. I read about this. Like 6 banks, or how many? 250,000 to get 2 million. What do you need? 8 banks. So I think that's what he's doing. He's spreading out the risk amongst all the actual banks. I don't see any issue with that. That sounds like a nice thing for consumers.
Maybe so. I just lately I'm so on the lookout for this, like for when the rug's going to get pulled out, the sell in May, that I've been 10th manning everything. Just like thinking what am I missing? What am I missing?
12 banks. There you go. 12
just like this Apple thing. I was like, oh, I love that about Apple, but then I'm like, no, this can't be good.
See, the problem is everyone's so bearish, and we've all been waiting for this this eventual crash and recession. It might not happen the way we all think. So,
all right, well, if Kramer came out tomorrow and said we're in a
recession,
then he's
no. Like, but my point is, I don't know. Like, look, I'm not an expert in the economy. Okay, I'm really not. And all I know is you buy quality when it's down, and you just keep doing that. Right. Mm-hmm. That's it. That's like the only secret. And I think, Carlos, you would agree. If something is going lower, you just buy it. Forget about a possible recession. As long as you're not screwed and you need the money tomorrow, of course. That's different.
I would say that Amit and Chris are essentially the same thing, with Chris adding the twist of, if it's a substantial portion of your position, why let the value drop if you can hedge and make some money on some puts on the way down? That's like,
Chris, what is
financial junkies in a nutshell,
No, but my point is, hold on, I didn't finish the point. The point was that if everybody is expecting something to happen, like 2020, I could have sworn like the world was gonna, like the stock market should not have gone up. Me and Carlos
Shot.
No, but let's bring this up. Like 2020 happens, April, May? No, March. I'm sorry, March 2020
March,
happens. Me and Carlos that's when we started talking on the phone all the time and like decided to do our channel. That's when we started roughly. And we're talking, okay, this has to go down. Obviously, the market starts going up. That's what we thought. Like 3 weeks into it, it started going up super high. And obviously the Fed started printing more money.
Yeah.
But we're like, this can't sustain. This is impossible to sustain. Okay, let's not rush in. Let's not buy everything we want. And then it went up another week and two. And we're like, okay, this is getting it's crazy. I'm like, maybe we should buy something, right? So we started buying things like Enphase and Tesla and whatever else. We were just buying
FUV.
FUV, yes.
We bought Bitcoin. We were getting Bitcoin cheap.
But the thing is, that thing that we thought shouldn't be happening lasted 2 more years.
But I think it's because I think
you see my point.
I think it's because up until 2020,
things are different now. Interest rates are up.
Oh, things are different.
Well, no, but
they're always different. But if you go back, hold on. If you go back in time and you look at the actual charts, which I did on interest rates, when there were double in the teens, the market went up. In the teens.
Was
the difference now,
money?
I think,
but it's relative. It's relative to what the people at that.
No, I know,
time
but the difference is now. Okay, this was a fast increase. Everybody keeps saying how fast this was, but eventually it becomes the norm. Do you understand this?
Yeah.
No,
eventually 5%. Hold on. Eventually 5% is the norm, and we move on.
It doesn't take a rocket scientist to figure out the Fed printed money in 2020. The market went up. Like that was
a lot of people didn't know that.
No, I get it. A lot of people didn't know that, but you're trying to say there's this like sentiment that when people get fearful, you just buy. But in 2020, when people were fearful because of COVID, the Fed printed money. That explains.
Hold on, that was a real time. That was actually a real time to be fearful. What is everybody so afraid of? That banks that are tiny, that don't mean anything for the actual economy,
I agree
down?
I agree with you.
No, there is no fear. The fear is manufactured by CNBC, and then we have to discuss it like it's a real fear on this podcast. It's not. This is not legitimate. Tell me when JPM and Citibank are going bankrupt. That's when I'm going to get afraid.
I agree with that. I agree. No, that's fair. And then that makes sense to bring up the COVID example. Chris, what is your thoughts on 97% of deposits are fully insured? Why would people kind of
bring that up? Bring that up.
I know you responded to this. That's why I want to give you a chance to respond live on the pod as well.
Mm-hmm.
So you said SoFi's in regional. If the contagion spreads, they'll be done in an afternoon. Our friend, the other Chris, said it's not going to happen. Delinquency is the only risk, but that's not going to happen, even if it does.
Okay. When you try to do investing, you should always look at every angle that can come your way. And then based on that, use the risk modeling based on that. So right now, the risk that this won't happen, I'm sure that it's very low. All right. Maybe SoFi has figured out the magical formula on how to lend to high credit only borrowers, and personal loans are the way that they're going to do very well for themselves, whatever you want to think about it. That's not how human psychology works, okay? Human psychology works in a very different way, where the minute that something goes wrong, everyone tries to rush out the door all at once. So right now, my logic behind what I'm trying to say is, right now, SoFi is not getting hit with bank runs and everything else. But if you see that share price go down to $1 for whatever reason, maybe they had a bad quarter. Maybe some delinquencies got away and they had to recognize some losses, and people start selling off the shares. The minute people start selling off the shares, no one is going to say, well, you know what? SoFi is FDIC insured. It's okay. My money's great. I'm just going to keep them there. They're going to say, fuck that. I don't want to risk it. Let me take my money out. I don't want to risk being with SoFi. And the minute they do that and they start getting hit with bank runs, now they got to worry about liquidating those fucking personal loans, which are illiquid assets that are on the balance sheet. Okay. Even if the people are still paying their personal loans on time, everything is great, their student loans, people are paying them, they'll be done in an afternoon, because at that point, they'll be insolvent in a heartbeat. And then the FDIC is going to have to take over and do all the stuff that they need to get them out of the hot water. So when you're trying to invest, you don't just say, okay, you know what? I'm going to invest in the hopes that everything always works out the way I think it will. You also have to take into consideration some of the downside that could happen if this happens. The fact that they're in personal loans is not good. Okay. I know a lot of people are thinking, and not to mention, they're not even building up a fucking reserve just in case for these credit provisions. They're literally keeping all of this shit on their balance sheet as held for sale. Okay. It's one thing if you're holding on to a whole bunch of cash on the side just in case something happens, so that if let's say you have to take some losses on your personal credits, you have some money on the side that you can use to just say, you know what, it's okay, we've got this money on the side. These guys don't have that. They're literally riding on the seat of their pants. So I hope it doesn't happen. I hope none of this happens. I hope SoFi does very well for you guys. But I'll tell you right now, there is a lot of risk being in SoFi.
Real quick, Steve just texted me listening to you because he didn't want to put it in the chat, but I'm calling him out anyway. He says people are not pulling their money from SoFi due to FDIC backstopping deposits, SoFi going to $2 million in FDIC insurance, and SoFi giving 4.2% interest, which is far above the big money centers. Why would there be a bank run? And they have $2.5 billion in cash if that happens.
His whole point, and I was trying to make the same point. It's like, this is what I learned in 2020. You can look at your charts, you can look at forward P, you can look at whatever, but markets are predominantly psychological. It's people on the other end of this thing that are making these trades. People can think that, so yes, by and large, we can say, yes, SoFi's financial fundamentals look good, but my money, right? I'm taking my money out of here and I'm moving it somewhere else. If enough people do that, it's what they say, 5% critical mass for anything, it just triggers a wave. This is what happened on the upside. But I think it's even worse on the downside, because I think by and large, human beings are still a slave to like our limbic system, right? We needed to have an outsized, predisposition towards fearful things than positive things, because the fearful things would kill you if you eat the wrong mushroom, or if you hear a twig snap in the forest, it could be a predator.
I like that he went to eating wrong mushrooms.
I don't think Anthony Noto lets his business die.
There's
Anthony
also
Anthony Noto can't control that.
He can't control that. If there's a bank run, Anthony Noto can't control that shit.
Well, no, he can do a lot of things.
He's gonna be like in Game of Thrones, like Hodor.
Hold on, I do want to say,
if the bank run happens, he can't do anything.
Hold on, I do want to say, by the way, I actually agree with Chris in terms of there's a lot of risk in small banking right now. So there is a risk in that, investing in small banks, which Chris is about to do, by the way, tomorrow. Just FYI, everyone following him into a bank.
Truist is not. Truist is not a small bank.
Okay, it's a giant bank. Fine, part of the critical infrastructure. Even though you told me it's all small businesses, but okay. So we have that. The small banks are an issue, but if you pick the right small banks, like Chris is trying to do, SoFi has massive upside. This is what the asymmetric bet is, that if the bear case does not play out like Chris is saying, which most likely the world does not fall apart and every bank does not go to zero, that there's going to be a certain percentage of banks that are completely destroyed right now because they're being lumped in, like SoFi, okay? And then a year or two from now, when this is all over and the rates are coming down, those banks are going to benefit. Do you agree with that, Chris?
Yeah.
So that might be SoFi and might be Truist or whatever. Those banks would benefit. I'm not willing to take that bet and keep putting money into SoFi, first of all, even though I have a small position. So I'm not willing to do that because I think there's other things we can buy, as we've discussed already. But the asymmetric bet is still there, that you can lose a lot less than you can make on the upside when it returns. So, trying to be the devil's advocate here, or the 10th man.
Yeah, but wouldn't you agree that the dollar amount invested is not as important as the percent allocation of the portfolio?
Oh yeah, it should be very small for something like this.
There's also another factor too. Why keep your money with SoFi when these other opportunities are giving you very similar returns without nearly the amount of risk? So as an example,
who's giving you 4.5% right now?
Robinhood's giving 4 points.
Actually, I got the email.
All money markets.
Chris,
yeah, I know, but even your money market accounts right now, you go to any
but
Fidelity.
The average person doesn't do that. The average money market accounts, the average basic, 433,000 people. These are random people, you and me.
But that's what I'm trying to say. The moat that used to be there, that these guys were the only game in town when it comes to this, money is a lot more flexible and it can move very quickly. That's one of the reasons why we're seeing this banking issue happening in the first place. Before, you would stay with your bank, you would have to go to another bank, you have to open it, you have to sign paperwork, move the money across. Right now, dude, you can open another bank account, move your money overnight, get the whole process done in a very short period of time. So even when it comes to these runs, there's no stopping people in a very short period of time. Look at Apple right now. Apple with Goldman Marcus and all that other stuff.
But Chris, that's the only argument I think you have. It's like Apple is so simple, someone can sign up in 3 minutes and get the APY. SoFi is very simple as well. It's not it's much more simpler than all these other places.
We actually signed up, by the way. Me and Carlos have Freelancer Finance at SoFi.
Yeah.
But
what I'm trying to say,
getting 500,000 members on average, every quarter.
But what
right?
I'm trying to say is, look, if SoFi does take some water, people can move their money very quickly. Like Vitaly and Carlos, I'm sure that if SoFi was like trading at 50 cents, per share because of some issue that happened, you're not like, hey, you know what? It's okay. They're FDI insured. I'm going to let FDIC give me my money.
Yeah,
I'm
but
going
that
to
all
do the
relies
paperwork.
on
No, that's going under my
delinquency.
mattress.
That
Yeah.
You know what I
all
mean?
relies on SoFi
It's
actually
good.
having a bank run. Like you have to be right about the bank run for your argument to make
Yeah,
sense.
yeah. I mean, you're jumping the gun, Chris. So
Yeah, that's
Yeah.
we,
you're
we should
jumping the
wait for
gun.
more. Look, once again, I'm not a SoFi bull here. I'm not saying buy SoFi. I'm saying a couple more things have to happen. Like you're saying, if the stock started dropping to 3, 2, you're like, oh, okay, maybe we shouldn't trust this bank anymore, right?
I would say in the short term, I think there's better value propositions out there with banks, especially that are much safer, that have a longer history of managing risk. They are in less risky sectors and they're more diversified in their loan base as well. So those are the things that like I'm looking at. And with SoFi, I'm seeing that they have a enormous amount of risk in non-tangible assets that are backing it. So even people are saying, well, commercial real estate, some other banks have exposure to commercial. Those are still real hard assets that you can derive some value out of. Personal loans, no, those are unsecured, unsecured debts. And those can actually be written off even in bankruptcy. So I just think that right now the economy is good enough to the point where we are not seeing these delinquencies. But if these delinquencies start coming in, we got a problem. And yeah, like I said, I'm not going to risk
SoFi is
it.
not going to collapse? You know why? Here's the number one reason. Chamath Palihapitiya back them, and I trust Chamath Palihapitiya so much.
Yeah, go ride on his moon rocket too, bro. Virgin moon rocket. All the shit that he sold onto the retail investors.
I thought you were implying some other moon rocket.
No.
I love getting Chris riled up because he hates Chamath.
Go ride on his moon rocket.
I hate Chamath so much, dude. I hate Chamath so much.
I don't know.
Man.
I like him. I think he's
all right. Next topic. What do you say? Let's get.
Here we go.
Let's talk about Chamath.
101.23.
Why the hate?
Paramount stock. This is a stock that is Buffett owned, down 23%. A Buffett owned stock down over 20%. Dividend goes to 5 cents versus 24 cents. Revenue on Paramount Plus, not total revenue. Revenue on Paramount Plus, 1.5 billion, up 40%. Amazing numbers, but they lost 511 million, up from 486 million dollars in losses, assuming the content licensing and costs was up too much. Further making the argument that streaming is a very tough business to be in because content is very expensive. Stock is down 22%. Do we think Buffett sold out of it? What do you think is going to go on?
Before you go to Buffett, this was a Chris pick. He said buy this over Netflix.
No,
I didn't say buy.
Chris was excited about the stock, but he told my morning stream today he never ended up buying it.
Okay. Yeah, I did a lot. These are the kinds of things I'm saying. We were trying to compare Netflix to other streaming services.
Right.
And I'm going to do more due diligence on Paramount. Like I haven't looked at their balance sheet. I don't know what their cost structure. I haven't even listened to their earnings call today because I want to hear what their reasoning for cutting that dividend is. Are they using the extra savings to buy back some debt? Do they have a lot of debt on their balance sheet? Are they using it to reinvest in the business? Because this could be one of those times where there's a lot of opportunities that open up. And I also want to see like from the big hedge fund side of things too, like what are the 13 Fs that are going to be coming out where we see that 22% in Buffett sell. I don't know. We'll see. Once I see the 13 Fs, we'll know more, right? To see who's buying.
Do you have any info on the streaming? How did that do?
Yeah, that's what I said. They did 1.5 billion in revenue, up 40%, but their
Yeah.
costs is up 500 million versus 486 million on Paramount Plus specifically, not the whole business. But their revenue with Nickelodeon, MTV, Comedy Central, CBS, 5.8 billion, but that's down 8% year over year. So, I mean, revenue continuously declining overall. But this dividend cut, I think that's what got investors pissed off.
Yeah, right now, anyone who's cutting dividends is taking massive hits because I think a lot of what happens with dividend stocks is that you have an entire base that's just there for the dividends, right? Because that's what they're doing. Like if you give me a fixed return, I will be a loyal shareholder. But if you cut the dividend, I'm selling. And right now there's a lot of opportunities where other people are giving higher dividends. So why wouldn't I go with them? So they're going to sell off. Now, does that mean that your business is fundamentally flawed? No. It could mean that, in the short term, you're cutting the dividend to make some improvements in the business that are going to yield you a long-term return. So I just have to see, like, If you look at Netflix, Netflix doesn't even give a dividend, right? So there was no dividend to cut. So let's see what happens.
Let me ask one question, Vitaly, while you're preparing this chart, and I want to get Carlos's take on this.
How do you know I'm
I
preparing
didn't do as much due diligence at all on Vitaly, because you're preparing whatever you're preparing. I didn't do any due diligence on this stock at all. My due diligence, I want to ask Carlos because he's like in the creative space. I want to see if this connects with investing. My due diligence was the content is fucking trash. Therefore, I'm not buying the stock because, you know, baby math, 2 + 2 = 4. If the content sucks, people are not going to subscribe. Therefore, the business is not going to do well. Is that enough of an investment, basic due diligence thesis to not buy a company like this? Or is that a naive way of thinking about investing when you're investing in a creative company, a content company, when it comes to this? Because my due diligence seemed to be correct. The stock's down 20% because the content sucks, which is reflected in the numbers.
I don't think the content went down because I don't think the price went down because the content sucks. This is actually really personal. What's happening with this company right now? This is a company. Vitaly and I even were looking at this company very early on in the pandemic.
No, I had it in my dividend portfolio last year.
Mm-hmm.
Or 2 years ago.
We were looking at this. We were thinking people working from home, they're going to be home a lot more, right? And we kind of felt like these streaming services would consolidate. I'm hearing a lot of what's happening firsthand from the people that are affected by this. And as much as it sucks for a lot of like my friends and colleagues, I do think that they're going to be okay. They're going to, they have such a massive library and you have to understand too that having great content doesn't necessarily mean that you're always going to have great content. Like once everybody on Netflix has seen Squid Games, you got to give them another Squid Games. And
that's my point, Carlos. Netflix is able to keep producing those hits. I was kind of wrong on Netflix because they've outperformed in terms of their content hedge, which is why my question is, if I think
the subscribers, they lost subscribers last.
They started gaining them again. No, they started.
Well, they started gaining. But what I'm saying is, it's very finicky. This is also, you have to understand. It's like Vitaly and I were talking. The comparison we were making about Apple. When the shit hits the fan, what's the first thing that gets cut? It's not your iCloud. It's the Netflix.
No one's cutting Netflix. Absolutely not.
I know people that have
100%.
I agree with Vitaly here. Again, going back to my point, basic due diligence was if the content sucks, there's not enough subscribers to generate the revenue needed for them to justify, Paramount Plus being a success. So I feel like you can put 2 and 2 together and be like, it sucks. Vitaly's right on this. The content on Netflix does not suck. Over the past 5 months, they proved me wrong. It is good content. And as a result,
they're great content if you know what you're looking for.
But it's also seasonal. It's subjective. It's like you can't. The only way that you say it's good content is because people are voting.
The numbers don't lie. I mean, you look at culture, the memes that are going viral. Everyone knows you. Everyone knows Love is Blind. The fucking servers crashed when they tried to do Love is these are cultural phenomena.
Sure, but look, I was there very early on at some of the cable networks when they were still only like HBO, Showtime, and Stars. I know what that's like. Some of those companies are gone now, right? It's seasonal.
You can't be comparing Netflix to being gone.
No, I'm not saying Netflix is going to.
But we can come back. I'll just point out real quick. His bull case, Chris's bull case on this company. You know what? It's down. It's not the lowest it's been, but this is what you would have had if you invested in the last 20 years in this company. So it has never been a good company.
But they had a dividend. That's what they had.
They had a dividend, and that's it. It has never been a good company. And the chart shows it. Investors never.
But pull up AT&T. I mean, that's not fair because if it's a dividend company,
fine. AT&T has never been a good company.
But it's a dividend. It's a dividend beast.
But that's Vitaly's point. For a content company, you have to have
you cannot hold a dividend stock by the same metrics that you hold.
If they introduce a direct to consumer,
I'm glad you brought this up because the reason you buy Netflix is because it's not a dividend stock. It's a growth stock.
For now.
Hold on. People still think. There's a possibility of growth. They're getting into other things. This is what they think, whether you believe it or not. Okay.
Yeah.
When you look at Paramount, you're just like, this is an old stodgy company run by 70-year-olds who doesn't know how to do tech. This is what people think. And we had a dividend from it, which was great. So I didn't mind that it didn't do anything. Mm-hmm. And now you think you're going to change into a Netflix because you put something online? No, that's idiotic.
Okay, but you have 10,000 shares of Netflix right now. You have 10,000 shares of Netflix. The money sits.
By the way, I had 5 and I sold them for Enphase, just so you know.
Ooh, big spend. I'm just saying, you have 10,000 shares of Netflix right now, and you're holding it for the next 5 years. They need to show you, the investor, consistent growth quarter over quarter to justify.
That means content, right? So Atang, he says, I don't think looking at content should be the KPI. I think that's the only KPI. The subscribers, the revenue growth, none of that matters unless I feel like it's so simple with these companies. If there's even the dividend or growth, whatever, if the content sucks, if YouTube had zero good content, Google would not be making $30 billion a year.
But again, you come back to if you ask 100 different people, does YouTube have good content? It really depends on what they're into.
All 100 people will say yes. I met
everyone on YouTube right now will say yes.
Let me make a little
right. StreamYard is the worst video streaming platform.
The 323 people will definitely say yes because they're watching it on YouTube. But real quick,
I like the Mid's
hold on.
Amid's case for Zoom. He's like, Zoom is the best streaming thing in the world as we're on StreamYard.
No, but look, Datra Ed said it. Netflix is easy to cancel if they're boring. It's very easy to cancel.
I agree.
They are boring,
which is why people are.
No, like if I cancel Netflix, my kids will kill me. You understand? They will literally just kill me at night.
I met a guy at the park today.
I agree.
I met a guy at the park today, Ukrainian guy. We started talking about Palantir. It was a very interesting discussion. And I said, yo, do you watch YouTube? He's like, yeah. I was like, do you pay for YouTube Premium? He was like, yeah. I went on his YouTube. He's showing me his watch history. It's all Ukrainian, Russian stuff. Like he's watching it in his language. 100 out of 100 people will say, yes, YouTube has good content because it's a search engine. Anyone can find anything. It's all personalized to you. So that's the moat, right? There's always good content. If there was no Ukrainian people, the guy doesn't watch Americans. He watches Ukrainians, right? That's what he wants. It wouldn't be good. So my thing is, if you ask 100 people if Netflix has good content, especially because Netflix is international, Paramount doesn't have a presence in South Korea or Japan. I would say like 70% would say Netflix is good. That's the thesis. Content is king. It's a simple thesis, in my opinion. That's why I was bearish on Netflix all of 2021 because I was like, after Squid Game, there is nothing on this platform. It's all.
But that's both the the double-edged sword, right? If it's good, if it's bad, you get cut. And you as an investor, this is where I think it gets dicey. If you have those 10,000 shares and you're holding on to it, you need to see those consistent returns to not take those profits. If they were paying a dividend, then you at least have a reason to hold it. This is why I feel like eventually it will flip. They will reach a saturation point. Like Apple, they reached a saturation point with the iPhones once they stopped reporting quarterly sales. And I think we'll see the same thing with these companies. Maybe they still have some more runway to go, but I think that's eventually where all of this is going. I think that's where a lot of this is going. A lot of these companies that we see as growth beasts right now will eventually reach a saturation point and offer a dividend.
Atong says better metric is total streaming hours. The content can be trashed, but people still watch trash. I still think the argument doesn't make sense because
the streaming hours don't matter because they don't. Netflix doesn't give a shit if you actually watch it or not. They don't care. They just want the money.
They do care about that, but they don't. Doesn't matter if it's an hour or 10 hours.
But you remember when Netflix used to have the voting system, the up and down? Like they don't.
They still have that.
This
is how. No, there's still the thumbs up. You could still, yes, I do that because then they feed you what you want.
It used to be you could rate it. Thumbs up and down is different. That's more about an algo showing what to show you. The rating system was different, and I think that was more accurate. But they moved away from that for some reason.
Well, my thing is total streaming hours only makes sense if the content is being streamed. So yeah, people may watch some stupid show on Netflix, but that can't be the like hundreds of millions of hours that the mainstream shows get, and you only get those total streaming hours, the metric Atong is talking about, if the content is able to put up hundreds of millions of hours.
This goes back to the network, Carlos. And I'm not saying Netflix is like the best investment, by the way. I don't have any stake in it. But this goes back to the network we were talking about before. If someone has a big network, it's easier for them to make that thing, whatever it is, the widget, the solar panel, the microinverter, the car. As the network gets bigger for Netflix, they just get bigger. That's it. Just like Apple. So Paramount has a lot to compete against. So I don't think it's a good investment. It's been 20 years of dead stock, and it's probably going to continue that way because to get to the point of Netflix, they should have done that 10, 15 years ago. That's over for them.
Well, from what I understand, from what my friends and people that in the business are telling me on the ground is like they're consolidating a lot of their networks. And so what they're doing is they're finding what is.
I agree, Chris. Great point. Is this?
Chris was making great points for the past 10 minutes. This is the one time Chris hasn't talked for like 10 minutes.
I mean, look, we can do like Congress. We can do like
funny.
Congress.
That is funny, man.
We can do like Congress, and I can say I relinquish my time to the gentleman on the bottom left corner.
So Chris, overall, Chris, you would not buy Paramount. You totally smoked in reasonable case.
Yeah, no, actually, I was looking like when people cut dividends, I want to see why they're cutting their dividends.
It's true.
Right?
What are they doing with that?
What is the profit? What is it? Profitability that's impacting them in the short term? What is it? One of the things I know is that the reason why they have been so valued like this is because they overpaid for a merger that they did with CBS Viacom. So they still have a lot of debt on their books. Now they're paying off that debt pretty quickly. So I'm looking at their balance sheet right now. So I'm going to deep dive into them a little bit more later today and just see what
Someone
see
needs
what
to
it's
make
about.
someone needs to make a meme of
All
like
right.
someone
Can you put
diving
up
in
the
a pool
primordial
and
light?
put-
That's funny.
By the way, guys, we got 15 minutes left. Please leave your questions. 15 minutes left. Please leave your questions.
Wait, if
If
you
you
have
have
a
a
big
big
thing,
thing-
everything is easier. I like your thesis. He
That's,
spelled my name wrong. and anyway.
Did you hear the guy yesterday, Anu? He called you Vitali. I was like, that's hilarious.
Yeah, I mean, my name is like right there. There's like a circle with the white letters, and everybody spells it.
That's how they pronounce it. It's different, man. Like you could.
fine.
There's a lot of stuff that you have that like people are gonna pronounce your name different. Like I'm sure that people are gonna say Amit is gonna be something different too. Like Amit.
Amit.
Yeah.
I was thinking
pronoun-
about that the other day before
Yeah.
we did our first podcast with him. I just could not get my head around that name. Your last name was just like it was like my tongue could not shape in the way to make that. It was like, and now it's just now you look like an Amit.
Yeah, Amit Cock Raja, right?
Yes, Amit Cochran. That's what we got. Johnny says he thinks my question, but you will ignore it. Johnny, why? Johnny, we love you.
What's
Why-
your Johnny? What's your
everyone-
question?
Everyone
When-
stop till Johnny writes the comment.
His
will-
comment is
no one talks till Johnny writes
discuss
the comment.
Enovix. His comment is talk about Enovix.
We were supposed
someone-
to talk about it yesterday, but we just ran out of
And
time.
somebody comments. People keep commenting to us that we should do a minimum like 10 minutes or so on Tesla every day.
Okay, so all right, questions. It's
Didn't we
already
already do that?
11:15.
That's what I feel. I feel like every day we talk about Tesla, but we haven't been recently. Kelly, do you want Amit's last name? You
No.
can have it.
She likes-
Just become a teacher.
Cock Raja.
Bro, her initials would be KK. You know, it's interesting. Yo, would you ever take your wife's last name?
No.
No, what are you talking
Who
about?
does that?
We're old. We're not gonna do modern things.
No way.
I was just asking, just seeing. Yeah, we really got to go at 11:30. I have a hard stop, so let's see last 12.
Yo,
12
mad
minutes.
Oh,
props
you have a
to
hard
guys.
stop,
Look,
but we
it's
want to go
only-
for 4 hours,
It's
buddy.
only like 8 o'clock for me here, and I
Ridiculous.
gotta give you guys props for staying up so damn late. Like,
All right,
to do
go to
this.
some questions right now.
We talked about Shopify, Starbucks for like
That was in the beginning.
20 minutes.
Yeah,
Good job.
there's a timestamp.
Knowing that China is preparing to attack Taiwan, why is it smart to invest in Tesla when they actively build infrastructure in China?
Oh,
That's a
can I
great
have a
question.
spin on this one?
You can have a spin, Carlos. Go. For
I
it.
think Chris should answer this question, but as Vitali.
What?
hold on. He's like, can I make the shot? He's like, yeah.
What are
He
you
passes
talking
it to
about?
Chris, and he says to give it to Vitaly to pass it back to Chris.
No, what I'm saying is, I think it'd be fun to see Chris answer this question as Vitali would. I think
And Johnny, what's your question? Put your question.
yeah, Johnny, seriously, because he's a long time. He's a
Yeah,
long.
Johnny,
time
we love you. Put your
OG.
question there. All right. So, what do you want Chris to do? You want him to dress up
Wait,
like Vitaly?
Hold on. Before that, I thought you were putting on people like just randos. You were just.
1 day a week. That was 1 day a week.
No, one day a
not
week, every
day.
Wednesday.
Oh, I thought that's okay. You could do 1 or 2 a day. That's fine.
I'm down to. It's just I thought maybe it makes it a little more special. We do it 1 day a week, but I'm down to do it every day, like last time.
No,
It's
if
just
we
a
have-
good
if we have
idea.
time,
It is the
if we
show,
have
right?
time.
It
Okay,
takes a good
So
25 minutes.
so
You know?
let me answer this as Vitaly real quick, okay?
which
all right.
which means Chris, you
No,
have.
but let me answer it as Chris. You know what? Weight Watchers really plays
he
a
would-
role here. I
He would
feel.
tie it
You know
back.
what?
He would tie
China
it back.
has infrastructure, and infrastructure is like buildings, and buildings. Well, SLG they have a lot of buildings. And
Well,
SLG,
you know,
he would be
listen,
like-
listen.
hold on,
Teslas, they're just gonna build everything with my inverters. Micro inverters are the future. Like
He's gonna be
when
like,
you have a
oh,
Tesla car,
Right.
you guys don't understand. Everything's gonna run on solar. Like, come on, guys. You guys don't see it in like 2023. There's gonna be like 50 million inverters.
Do I talk that way?
Oh my god. Like,
Yeah, he's like,
inverters, man. Inverters are the future.
everyone knows microinverters are rocket proof.
It's come on, everyone just knows. Like, am I crazy here for thinking that inverters aren't the future? Come on, inverters,
PCA
guys.
is a high quality inverter.
Right.
Laugh now, Chris. Laugh.
Anyways,
Are they
more
high quality
inverters.
rockets?
All right, I'm
You know,
gonna
and,
answer
and,
the
and
question.
then Carlos
so
would
weird.
answer it. If Carlos had to answer this question, he'd be like, Taiwan just needs FSD. If they have FSD, everything's solved. If they have FSD, there's no problem. FSD
Okay,
is
so we're doing that. Everyone answers to somebody else.
how would I answer this? Vitaly, 30 seconds. How would I answer
You'd be
this?
like, well, the company that has Palantir is the only one that's going to be able to get the software. You need the data and the philosophical mission to understand why China is attacking Taiwan, because without it,
That's very true.
you can't win.
Why'd you
Therefore,
do that?
Heart is the answer.
He would have said Palantir is. If they had Palantir, then they would have told them not to build anything in China.
Right.
Oh my gosh.
Can someone actually answer the question?
Wait, it's a good question. Why the hell is China Tesla?
Thank you,
China?
Kelly. I'd been practicing the hair swoop. The
You
hair
gotta know
swoop.
the philosophy. You did it. That was a great. I think that was the best one.
Oh, well, okay. So let me just do a quick answer of what I think, and then Carlos probably has an Elon Love thing happening, so he can answer it a
Okay,
different way.
But
the way I'm going to answer it is that basically, look, they're diversifying across the whole world. Their European factory, Gigafactory in Germany. They have Texas. They have California. They're building a new one. Where was it?
It doesn't answer anything about China. Please answer.
It does answer it because they're diversifying across the whole world. So if one
diversifying
thing
to the
goes
risk.
down,
Right,
the whole
right.
thing, the whole operation does not.
Just
Apple,
like
on the other hand,
just like having
whole operation goes down.
microinverters, right, Vitaly? Just like having
If they had in a couple of inverters, that would be good.
Okay, so your answer is diversification. That's it, Vitaly. That's
a great fucking answer. I don't know
No,
what
that's
you're
not a
talking
great
about.
answer. Chris, can we get a better answer? Chris, why are they doing this? Go ahead, Chris.
I agree with Vitaly. That's exactly right. They're diversifying their supply chain. If China says, we don't want you to sell Teslas tomorrow, okay, big deal. We'll close our stupid factory. We'll sell to the rest of the world.
No. But I don't think you guys are getting to the heart of the reason this question is so important is because let's say 99% China invades Taiwan, and that's at least what Taiwan believes. We know this is happening. Why is Apple's getting out of China?
This
Why
affects.
is Tesla going into
They're
China?
not out of China. They're nowhere out of China.
But
And that would
they're
affect
trying
Apple
to
way
get out.
more.
But
And
they're trying to-
Nvidia.
Exactly. I was just gonna say. I mean, we went through this before. When China closed down, so many other companies realized how vulnerable they were having all of their supply chain in China, and they've already taken the steps to mitigate that. So, actually, I'm sorry. Go ahead, Chris.
No, I'm saying that's one of the bull cases of Intel, which is they're building their foundries outside of Taiwan. So much of the infrastructure for semiconductors right now is broadly in Taiwan. So now people are saying, well, look, even though we are going to put an order out to TSMC to build half of the demand that we need, we're also going to give half of that demand to Intel because we want to make sure that we have a supply chain of things that are coming our way, just in case China acts like a shithead. So I think diversification is what everyone's doing. I'm actually bullish on Mexico because of that. Because the people that I've spoken to have pretty much said everyone is nearshoring right now. They're moving their production facilities out of China.
Yeah.
They're moving them a little bit closer so they don't have to deal with the geopolitical risks of even blockades in the Pacific. That's the other thing. China could fuck us over by, let's say you have a factory in Malaysia and you need to import shit into the US, right? And China's like, you know what? We are going to create sanctions around Malaysia, and they control the South China Sea. You know how big of a problem that
getting
is?
Products out of there. Yeah.
So you need to diversify your supply chains to make sure that they're closer to home. So especially with critical infrastructure stuff like semiconductors and chips, you need that to run an economy right now. If you don't have those, you need that for defense. You need that for general economy stuff. Yeah, so a lot of critical industries are moving. And that's probably one of the reasons why we're seeing such a strong labor market right now, with a lot of people moving production back to the U.S. The U.S. is incentivizing also a lot of production at home, like the CHIPS Act. The CHIPS Act is literally a carve out so that they build production here in the U.S.
And the IRA.
Even if it means,
for
the IRA.
For all that stuff, EVs, batteries.
Yep.
Can I make like two opposing arguments, or not arguments, but potential arguments, because I don't know how it would go. I could see it being both good or bad for Tesla. So they're preparing to attack Taiwan. Why is it smart to invest in Tesla? Number one, it depends on what the narrative around that is, right? If since Tesla is heavily invested, if the narrative around it is China bad, right, and any company that's heavily invested in China, that's bad, so it's going to affect Tesla because a lot of their sales comes out of that factory, at least until the other ones ramp up. The way that it could be good for Tesla is because if China's in the middle of a war, that could tank the EV stocks out of China.
BYD.
And so where does that money go?
Tesla. To Tesla.
So the Chinese investors will want to invest overseas. So this is why it's like you don't freaking know until the shoe drops.
Anyone with any real money right now is taking their money and putting it into the US and Canada. Like literally one of the reasons why we've had such
stock, dude, I would not have wanted to be a NEO stock investor because it had nothing to do with what the company's doing. It's the CCP. So man,
and they're down like $7 now.
And ET FaceTime is right. China's in the middle of a demographic collapse that we're going to see.
So I think a lot of people, especially even among China, they're taking their assets, they're moving them overseas because they know that with these communist regime, if you fall out of favor, they'll disappear your ass. Like, look at what happened to Jack Ma. You can't do business in a country like that.
Right. And he was one of the most powerful people. The dude disappeared.
Yeah,
man.
yeah, he's
Anyway,
gone. And,
I gotta
one of the
get
greatest
going,
entrepreneurs in China, just gone.
Yep.
And by the way, so the answer, Amit, was diversification. Thank you very much.
You muted yourself.
Yeah,
He
Wow.
muted himself. Thank God.
After hearing it 3 times explained in eloquent ways, I have come to the conclusion that the answer is sufficient enough for me to feel that you guys did a
Okay,
good
moving
job.
on. Next.
No, we're done. The podcast is done, Vitaly. We have to end the podcast.
Vitaly has spoken. It's over. It's a wrap. We're all moving on.
So let me just do a quick minute of sign-offs. First of all, it's Thursday night, so we're ending the weekly version of the podcast. We'll be back Sunday, 9 p.m. Eastern. A couple things I want to say for this week. This is, I think, our 4th week of doing this in a row. This is the first time we've averaged 300 a day. It means a lot. It's very important to us. It's really cool. We can't, in our group chat, we're constantly talking about how we don't even believe this is real. Not to get super dramatic about it, but it is, it's a really cool thing because this could grow and it could get really big, and it's cool to see some progress and momentum there. And we're trying to be consistent to maintain it.
When you guys from overseas make comments that you listen to us on the way in to work, I grew up and when I was in my early 20s, I grew up in a work van driving to work, listening to Howard Stern and
Howard Stern,
Imus
baby.
in the morning. To think that
these
guys like us, that's pretty awesome.
And Carlos, I'm so happy you said that. I said I was going to do this, but I forgot. Please comment where you're from right now. Where are you watching? What state are you in?
Oh my God, he's doing the AOL age location check.
No, it's going to be insane when you see the different locations.
Before you do that, though, just go to the Twitter, subscribe to all our Twitter stuff.
Yes.
Go to our channel, subscribe to that, and hit like and subscribe if you haven't yet.
Yes.
It's been a while.
And speaking of which, we've been trying to build the freelancer finance up to the minimum 500 follower threshold. I looked at your Amit, you're at 10,000 subs, unbelievable. Chris, 3,000, unbelievable. You guys deserve everyone. Just trying to get to the 500 and been doing we are now 3 followers away.
Oh damn.
3 followers away from hitting 500. If we can get 3 more followers, we can then apply for I guess monetization or to be able to have subscribers. And then 20 years when we're finally approved, we can do our first Twitter spaces in the metaverse, I guess.
Yes.
Please, yes. Follow us.
Please follow them on Twitter. A couple more things I have to say. Timestamps, a big addition to the podcast. I think we figured out a good method for it. I know it's going to help a lot of you. We just crossed, I just checked the analytics. We passed 4K on the last ones. Thank you all. We passed 4K on that last one. And then final thing I was going to say is, the StreamYard thing yesterday was surreal. I mean, seeing people who are on their couch chilling with a beer and we're on their TV. I mean, you know what's so crazy to me? Saturday morning, you remember you woke up and you saw Cartoon Network and there were cartoons? Mm-hmm. On Saturday morning, or in the night or whatever, and we show up on people's nighttime, we're their late night talk show, which is insane. It's just
congratulations, you guys just hit 500.
Oh my god, we did it.
There we go.
We did it. Oh my god.
What I want is a picture of you
we
guys.
Appreciate you all. Thank you all for that.
What I want before we end is a picture of you guys post-coital watching Freelancer Finance.
Babe, Freelance Finance is on. We gotta wait. Okay, let me read these up.
We were competing against against a Warriors game, dude.
Oh yeah.
Well, somebody was posting updates. Did you see that? They were
that
was pretty cool.
Smacked.
That was awesome.
The fact that we got 300 people while the Warriors and Lakers are on, that's a big deal. Let me read these off. Canada, Texas, in South Africa up at 4 a.m.
4 a.m.
California, Denver, Oregon, Seattle, Illinois, Washington, California, Michigan, Arizona, the moon. If you buy a pound here, maybe you'll be there. Detroit, Tennessee, Hong Kong, Amit's basement, of course. North Korea, yeah, definitely.
North Korea.
Hawaii, Canada, San Diego, Mexico, California, UK in GA, Australia.
Georgia.
Georgia, that's in Georgia, yeah. I'm here. I'm at work. I just got in here to like the video, watch the replay in the morning, and you'll have timestamps, Razor. Appreciate it for that. New Jersey, Florida, Dallas, Toronto, Massachusetts, Colorado, Florida, Philippines, California, Taiwan, Florida, Indiana, France, Richmond, Virginia, Atlanta, Georgia, Canada, Michigan, West Virginia. It's just in Singapore, Colorado. It's insane.
Kansas, crazy. That's crazy. That's awesome.
Cool shit. That's the power of YouTube and networks.
Yes. Yeah, I agree. And but it's also the power of consistency. And I believe in the content game, you gotta be more is everything. You gotta be part of someone's habits. It's the power of actual authentic friendships and actually giving a shit about each other. And it's the power of having a little lightning in the bottle magic of just being able to talk, and hopefully we have something. It's not proven yet. We got to do this for many months for this to be solidified, which is why I ring the bell when we hit 300. But I've talked to 3 people live before, and I've talked to 300, and 300 feels a lot better than 3. And only because you guys are here. So.
Nice callback to that, Amit. And with that, we're out.
We're done.
Later.
We'll see you guys Sunday. Thank you all. Good night.